This is perhaps the question every tech enthusiast is asking. Is the AI bubble about to burst? Every few days, headlines scream that artificial intelligence is overhyped, overvalued, and on the verge of collapse. We hear comparisons to the dot-com crash. We see sky-high startup valuations. We watch billions of dollars flow into companies that barely existed a few years ago. And yet, it hasn't popped. So what's really going on? Is this irrational exuberance? Or are we witnessing something structurally different from past tech bubbles? Today we're breaking down why the AI bubble has not popped and why the answer might surprise you. When people talk about bubbles, they usually reference the dot-com era. I lived through the dot-com bubble and, like many investors, lost a good amount of money from the subsequent crash. However, looking back to that era, you had startup companies with .com in their names, on astronomical valuations, with no revenue or profits. They had very expressive websites but no sustainable business models. So, when the driving capital dried up, the collapse was swift. A fundamental difference is that today's AI leaders are generating real revenue at historic speed. Companies like OpenAI, Anthropic, and Nvidia are not just raising capital. They are producing billions in revenue tied directly to enterprise contracts, infrastructure, and compute demand. That changes the foundation entirely. Bubbles pop when valuations float without economic gravity. AI seems to have gravity. Another reason the AI market hasn't collapsed is that this isn't just hyping software. Infrastructure is being built. Massive GPU data centers are being built worldwide. Cloud platforms are restructuring around AI-first architecture. Energy grids are being upgraded to handle compute demand. Major tech players like Microsoft, Amazon, and Google are embedding AI into their core cloud offerings. Now, this is not speculative experimentation, it is a foundational transformation. When billions are invested in physical and digital infrastructure, the ecosystem becomes more durable. Infrastructure cycles don't vanish overnight. Many bubbles form around niche sectors. AI is not niche. It touches every sphere of our existence, from marketing and sales to healthcare, legal, software development, manufacturing, finance, education, and customer service. It is a horizontal technology, more like electricity that spreads to more than a single product. That means demand doesn't depend on a single industry. Instead, it compounds across industries. When adoption spreads horizontally in this way, sudden collapse is far less likely. The factor to consider is the stickiness of enterprise adoption. Whereas consumer hype can fade, enterprise integration doesn't. Once AI is embedded into CRM systems, customer service workflows, analytics dashboards, and internal productivity tools, removing it becomes very costly. Companies are not just casually experimenting with AI, they are restructuring entire operations. When AI drives revenue or reduces costs, it becomes part of the operational DNA. That stickiness stabilizes demand, and that stabilization prevents sudden and dramatic collapse. Let's face it, productivity gains are real and measurable. This may be the most important factor why this is not a bubble. You look around, and the benefits of using AI are quite impressive. It is increasing productivity, developers are shipping faster, and support teams are responding quicker. Marketing teams are generating campaigns in minutes. Data analysis that once took days now takes seconds. When a technology directly improves profit margins, executives will not abandon it during market volatility. Instead, they double down. That is because productivity equals competitive advantage, and competitive advantage equals survival. Now let's be realistic. There will be periods of overexuberance. This is normal with any new technology. Some AI startups will be overvalued. Some companies may hop on the AI bandwagon to hype their valuations. These micro-bubbles inside a transformational cycle are normal. The dot-com crash eliminated weak companies, but it did not eliminate the internet. In fact, after the crash, companies like Amazon emerged stronger than ever. Corrections are inevitable, but they will not collapse the ecosystem. Instead, they will lead to consolidation and the emergence of winners. AI is not just a business trend, it's actually a geopolitical race now. Governments see AI as a national security asset, an economic multiplier, and a strategic technology advantage. When national interest lines up with private capital, the risk of a collapse diminishes. Funding doesn't just disappear when countries consider the technology essential to their growth. That kind of structural support adds another layer of resilience. So, a lot of skeptics predicted that AI progress would stall, but it really hasn't. The performance of each model keeps improving, and costs are gradually coming down as well. New capabilities seem to emerge every few months. Companies like Meta and Tesla are pushing even deeper into AI, from hardware to autonomy, and these large-scale systems. The innovation engine hasn't slowed down, it's actually accelerating. That acceleration is what keeps both investor and enterprise confidence intact. Now for a deeper dive. A bubble is driven solely by narrative. A transformation is driven by utility, whereas narratives fade, utility compounds. Right now, AI's utility is expanding faster than skepticism can suppress it. That doesn't mean prices won't fluctuate. It means the underlying value creation continues to compound. And value creation is what ultimately determines long-term survival. Could there be corrections? Absolutely. Could some AI stocks drop sharply? Of course. Will weaker startups fail? Definitely. But a full systemic pop would require the underlying utility to disappear. And right now, the opposite is happening. Adoption is increasing, revenue is growing, infrastructure is expanding, governments are investing, enterprises are integrating. That's not bubble behavior, that's early-stage technological transformation. Maybe the better question isn't whether the AI bubble will pop. Maybe the question should be, which companies will survive consolidation? Which platforms will dominate infrastructure? Which tools will become embedded into everyday business operations? History suggests that when a general-purpose technology reshapes multiple industries at once, the outcome isn't collapse. It's consolidation, followed by expansion. AI may not be a bubble waiting to burst. It may be a foundational shift still in its early innings. And the investors, builders, and businesses who understand that distinction will be positioned very differently from those waiting for a crash that never comes. If you found this breakdown valuable, hit like and subscribe to this channel for more insights into the fascinating world of AI. Drop a comment below and tell me, do you think AI is in a bubble, or are we witnessing the next industrial revolution? And if you want more deep dives into AI, business models, and emerging tech trends, check out the next video. I'll see you there. The description includes links to some of the most popular AI tools today. Thank you for watching.